The encrypted email arrived at 11:47 p.m. on a Tuesday, containing financial documents that would unravel everything I thought I knew about corporate accountability in Austin's booming construction industry. I'm Sage Williams, 34 years old, and I've spent the last 8 years as an Integrity Program investigative journalist for the Austin Chronicle's investigation team. My specialty involves following money trails through complex corporate structures, particularly in cases where financial reporting systems might be compromised. That Tuesday night changed the trajectory of my career entirely. The sender identified themselves only as concerned employee, with a Proton mail address that would later prove untraceable. The subject line read, "Meridian Equipment Rentals. You need to see this." Attached were 17 PDF files containing what appeared to be internal financial reports, bank statements, and regulatory filings spanning 3 years. Meridian Equipment Rentals dominated Austin's construction equipment market. Their yellow cranes dotted every major development site from downtown high-rises to suburban shopping centers. The company's CEO had recently received the Austin Business Journal's Executive of the Year award for innovative financial management practices. The documents told a different story entirely. I opened the first file on my encrypted laptop. The header read Internal Revenue Reconciliation Report Q3 2023. The numbers didn't align with Meridian's publicly filed quarterly statements. Revenue figures showed discrepancies of nearly $2 million. Equipment depreciation schedules listed machinery that didn't appear in their asset registry. Maintenance costs were categorized under multiple budget lines, creating artificial expense inflation. The second document revealed systematic patterns. Monthly reports showed consistent revenue manipulation across 18 months. Equipment rental income was being shifted between subsidiary accounts, creating the appearance of steady growth while masking significant losses. Insurance claims for damaged equipment were being double reported through different corporate entities. My journalism training kicked in immediately. Anonymous tips require extensive verification before publication. Corporate financial fraud allegations demand multiple independent sources. The Austin Chronicle's editorial standards prohibited running stories based solely on leaked documents, regardless of their apparent authenticity. I spent the next 4 hours cross-referencing the leaked data against publicly available information. Meridian's SEC filings, Texas Secretary of State corporate records, and Austin City permit databases all showed subtle inconsistencies with the internal documents. The patterns suggested deliberate misrepresentation rather than accounting errors. The most troubling discovery came in Document 15, an email thread between Meridian's accounting department and an external auditing firm discussed revenue recognition adjustments and asset valuation modifications. The language was carefully neutral, but the implications were clear. Someone was actively manipulating Meridian's financial reporting systems to present false information to investors, regulators, and the public. By 4 a.m., I had compiled a preliminary analysis showing potential securities fraud, tax evasion, and investor deception. The scope of the alleged misconduct extended far beyond simple bookkeeping errors. This was systematic financial manipulation designed to inflate company valuation and secure fraudulent loans. The anonymous source had included a final note. More evidence exists. Meridian's board meeting is scheduled for Friday. They're planning to destroy additional records. Time is running out. I closed my laptop and stared at the stack of printed documents on my desk. 17 files had revealed what appeared to be a multi-million-dollar fraud scheme operating in plain sight. Austin's construction boom had created perfect cover for financial manipulation, with rapid growth masking systematic deception. The investigation would require careful source development, document authentication, and legal review before publication. I needed to verify every claim, identify additional witnesses, and build an airtight case that would withstand scrutiny from Meridian's legal team. But first, I needed to find out who had risked their career to expose this alleged fraud, and why they had chosen me to tell their story. The next morning, I began the methodical process of source verification that defines credible investigative journalism. My first call went to Blake Storm, a former Meridian employee whose LinkedIn profile showed he had worked in their accounting department until 6 months ago. His departure coincided with the timeline suggested in the leaked documents. Blake agreed to meet at Radio Coffee on Barton Springs Road. He arrived 20 minutes late, scanning the crowded cafe before approaching my corner table. His nervous energy was immediately apparent. "I can't stay long," he said, sliding into the opposite chair, "and I need your word that my name stays protected until this goes public." I activated the voice recorder app on my iPhone and placed it between us. "Everything we discuss is on background, unless you specifically authorize attribution. Tell me about Meridian's financial reporting practices. Blake's account corroborated the leaked documents with disturbing precision. He described a systematic process where revenue from equipment rentals was recorded before contracts were finalized, creating artificial spikes in quarterly earnings. Asset depreciation schedules were manipulated to inflate equipment values on balance sheets. Most concerning, he detailed how customer deposits were reclassified as revenue to meet investor projections. The pressure came directly from the executive level, Blake explained. We were told to find creative solutions to meet earnings targets. When I questioned the legality, my supervisor said the external auditors had approved the methods. I spent the afternoon fact-checking Blake's claims through public record searches. The Travis County Clerk's database showed Meridian had filed numerous equipment liens that didn't match the reported asset values. Texas Comptroller records revealed discrepancies between the reported revenue and sales tax filings. Each verification strengthened the case for systematic financial manipulation. My investigation expanded to include Meridian's banking relationships. Using the Texas Department of Banking's public database, I identified 3 financial institutions that had extended significant credit lines to the company. The loan applications, obtained through Freedom of Information Act requests, showed asset valuations that exceeded the depreciated values in their internal accounting systems by over 40%. The pattern became clear through document analysis using Excel spreadsheets and timeline mapping software. Meridian had created parallel accounting systems, one for internal management showing actual financial performance, and another for external reporting that inflated revenue, assets, and profitability. The dual system allowed them to secure loans based on false information while maintaining plausible deniability through complex accounting interpretations. Wednesday brought a breakthrough when I received a second anonymous package. This delivery contained USB drives with digital copies of Meridian's QuickBooks files, bank statements, and email archives spanning 3 years. The metadata showed the files were extracted using professional data recovery software, suggesting someone with technical expertise and administrative access. Analysis of the QuickBooks data revealed the smoking gun I needed. The accounting software contained 2 separate company files, Meridian_internal and Meridian_external. The internal file showed actual revenue of $12.3 million for the previous fiscal year, while the external file reported $18.7 million to investors and lenders. The difference represented systematic inflation of over 50%. Email archives provided additional evidence of intentional deception. A message thread between Meridian's CEO and CFO discussed optimizing our reporting methodology to maximize investor confidence. Another exchange detailed plans to adjust depreciation schedules to reflect market appreciation rather than accounting standards. The most damaging evidence came from correspondence with Meridian's external auditing firm, Patterson and Associates CPA. The emails showed Meridian's management had pressured auditors to accept aggressive accounting interpretations that violated generally accepted accounting principles. When the auditors expressed concerns, Meridian threatened to terminate their contract and find more flexible accounting partners. I contacted Mia Storm, a certified fraud examiner with the Association of Certified Fraud Examiners, to review my findings. Her analysis confirmed that Meridian's practices constituted securities fraud, bank fraud, and tax evasion under federal and state statutes. The systematic nature of the deception suggested criminal intent rather than accounting errors. This is textbook financial statement fraud, Mia explained during our phone interview. The dual accounting systems, inflated asset values, and premature revenue recognition all indicate deliberate manipulation designed to deceive stakeholders. By Thursday evening, I had assembled a comprehensive case file documenting Meridian's alleged fraud scheme. The evidence included authenticated financial records, witness testimony, expert analysis, and regulatory filing discrepancies. The pattern showed systematic deception spanning 3 years and involving millions of dollars in false reporting. The investigation revealed that Meridian's CEO had used the inflated financial statements to secure a $5.2 million credit line from Austin Community Bank. The loan proceeds were used to purchase luxury real estate and fund personal investments rather than business operations. Meanwhile, the company's actual financial condition was deteriorating, with mounting equipment maintenance costs and declining rental demand. The scope of the alleged fraud extended beyond simple financial manipulation. Meridian had used false revenue projections to attract private investors, raising over $3 million in capital based on fabricated growth metrics. The investment agreements contained personal guarantees from the CEO, creating potential civil and criminal liability for securities fraud. As I prepared to confront Meridian's leadership with my findings, I received a final message from my anonymous source. Board meeting moved to tomorrow morning. Document destruction scheduled for 10 a.m. They know someone is investigating. The race against time had begun. Friday morning arrived with the weight of deadline pressure. I reached the Chronicle newsroom at 6:30 a.m., knowing that Meridian's alleged document destruction was scheduled for 10 a.m. The evidence I had gathered needed immediate legal review before publication. I called Detective Robert Wilson from the Occupational Safety and Health Administration at 7:15 a.m. Wilson had handled several financial fraud cases involving workplace safety violations related to equipment maintenance fraud. His expertise in corporate misconduct investigations made him the ideal contact for this developing story. The evidence suggests systematic financial statement manipulation, I explained to Wilson during our phone conversation. The dual accounting systems and inflated asset values indicate potential criminal fraud. The company's equipment rental operations may have safety implications if maintenance costs were misrepresented. Wilson agreed to review my documentation immediately. Financial fraud in equipment rental companies often correlates with deferred maintenance and safety violations, he noted. If they're falsifying financial records, they might be cutting corners on equipment inspections and repairs. At 8 a.m., I contacted Chronicle legal counsel Patricia Martinez for story review. Martinez examined my evidence package, including the authenticated financial records, expert analysis from Mia Storm, and witness testimony. The legal review process required verification of all sources and documentation before publication approval. The evidence appears substantial, Martinez concluded after her review. However, we need direct response from Meridian's leadership before publication. Journalistic ethics require offering them opportunity to address these allegations. I immediately called Meridian Equipment Rentals' corporate office, requesting an interview with CEO Blake Storm regarding financial reporting irregularities. The receptionist transferred me to the company's legal department, where attorney David Chen declined comment and refused interview requests. Mr. Storm is unavailable for interviews at this time, Chen stated. Any questions regarding company operations should be submitted in writing through our legal department. I sent a detailed email to Chen at 8:45 a.m., outlining the specific allegations and requesting written response within 2 hours. The email included questions about the dual accounting systems, inflated asset valuations, revenue recognition practices, and loan application discrepancies. Professional journalism standards required providing adequate response time while respecting publication deadlines. At 9:30 a.m., I received confirmation from my anonymous source that Meridian's document destruction was proceeding as scheduled. Shredding trucks arrived early, the source texted. Financial records from 2021 to 2023 being destroyed now. Board meeting postponed indefinitely. The timing suggested that Meridian's leadership was aware of the investigation and attempting to eliminate evidence. I immediately contacted Detective Wilson with this development, providing him with the source's information about ongoing document destruction. Wilson's response was swift. Document destruction during an active investigation constitutes obstruction of justice, he explained. We're initiating immediate preservation orders for all Meridian financial records and electronic communications. By 10:15 a.m., Wilson had secured emergency court orders requiring Meridian to preserve all documents related to financial reporting, loan applications, and investor communications. The preservation orders extended to electronic records, email communications, and accounting software databases. At 11 a.m., I received Meridian's written response through their legal counsel. The two-paragraph statement denied all allegations and characterized my investigation as baseless speculation based on unverified sources and misinterpreted documents. The response specifically stated, Meridian Equipment Rental maintains accurate financial records in compliance with all applicable accounting standards and regulatory requirements. Any suggestion of fraudulent activity is categorically false and potentially defamatory. I spent the next hour fact-checking Meridian's denial against my documented evidence. The company's response failed to address specific allegations about dual accounting systems, inflated asset values, or loan application discrepancies. Their blanket denial contradicted the authenticated financial records and expert analysis I had obtained. Chronicle Editor-in-Chief Michael Rodriguez approved publication at 12:30 p.m. after reviewing the complete evidence package, legal counsel's assessment, and Meridian's response. The story met all journalistic standards for accuracy, fairness, and public interest significance. The article was published online at 1 p.m. with the headline, Austin Equipment Rental Company accused of systematic financial fraud. The story detailed Meridian's alleged dual accounting systems, inflated asset valuations, and false loan applications while maintaining journalistic objectivity and presenting both sides of the allegations. Within 2 hours of publication, the story generated significant public response. Austin Community Bank issued a statement confirming they were reviewing their lending relationship with Meridian. The Texas State Securities Board announced they were examining potential securities fraud violations related to Meridian's private investment offerings. By 4 p.m., 3 additional sources had contacted me with information about Meridian's business practices. Former employees provided testimony about pressure to manipulate financial records and inflate revenue projections. Their accounts corroborated the evidence I had already gathered through my investigation. Detective Wilson called at 5:30 p.m. with an update on the criminal investigation. "We've executed search warrants at Meridian's offices and recovered significant electronic evidence," he reported. "The preserved documents support your reporting about dual accounting systems and financial manipulation." The Occupational Safety and Health Administration had also initiated safety inspections of Meridian's equipment inventory, examining whether deferred maintenance costs had compromised equipment safety standards. Initial findings suggested that several pieces of heavy machinery had overdue safety inspections and maintenance procedures. At 6 p.m., I received a call from Blake Storm's personal attorney requesting a meeting to discuss potential resolution of this matter. The attorney suggested that Meridian was prepared to cooperate with authorities and address the financial reporting issues identified in my investigation. The Chronicle's follow-up coverage continued throughout the weekend as additional developments emerged. Federal investigators from the Securities and Exchange Commission opened a formal investigation into Meridian's private investment offerings. The Internal Revenue Service initiated an audit of the company's tax filings for the past 3 years. By Monday morning, the story had been picked up by regional business publications and financial news outlets. The investigation had exposed a complex fraud scheme that potentially affected dozens of investors, creditors, and business partners throughout Central Texas. The impact extended beyond Meridian equipment rental. Industry associations began reviewing financial reporting standards for equipment rental companies. Banking regulators issued guidance about enhanced due diligence for commercial lending to rental businesses. My investigation had uncovered the truth about Meridian's alleged financial fraud, but the legal consequences were just beginning to unfold. 6 months later, I sat in my Chronicle office reviewing notes for a new investigation into municipal contract irregularities. The Meridian equipment rental case had concluded with significant consequences for all involved parties. Blake Storm pleaded guilty to federal charges of securities fraud and filing false financial statements. He received a 30-month prison sentence and agreed to pay $2.3 million in restitution to defrauded investors. Meridian Equipment Rental filed for Chapter 11 bankruptcy protection with assets liquidated to satisfy creditor claims. The Securities and Exchange Commission imposed additional civil penalties totaling $850,000. The Internal Revenue Service collected $1.2 million in back taxes and penalties from the company's corrected financial filings. Detective Wilson's criminal investigation resulted in charges against 2 additional Meridian executives for conspiracy and obstruction of justice. Mia Storm's cooperation with authorities earned her immunity from prosecution. She testified before a federal grand jury about the dual accounting systems and provided crucial evidence about the timeline of financial manipulation. Her whistleblower testimony became instrumental in securing convictions against the other defendants. The Chronicle's investigation received recognition from the Texas Associated Press managing editors for excellence in investigative reporting. The series prompted legislative hearings about financial oversight requirements for equipment rental companies operating in Texas. Industry reforms followed the investigation's revelations. The Equipment Leasing and Finance Association implemented enhanced financial reporting standards for member companies. Banking regulators issued new guidance requiring additional documentation for commercial loans to rental businesses. I created training materials for whistleblower protection programs used by several Central Texas companies. The materials emphasized the importance of secure communication channels and legal protections for employees reporting financial misconduct. The investigation had taken 4 months from Mia Storm's initial contact to the final publication of our series. The methodical approach of following financial records, verifying source information, and building a comprehensive case study had exposed a fraud scheme affecting dozens of victims. My current investigation involved potential bid rigging in Austin's municipal contracting process. Anonymous documents suggested coordinated pricing among construction companies bidding on city projects. The paper trail included email communications, financial records, and witness testimonies requiring careful verification. The Meridian case had reinforced fundamental principles of investigative journalism. Follow the money, verify every claim, protect sources, and maintain professional standards throughout the reporting process. These principles guided every investigation I pursued at the Chronicle. The truth was out, and the story was finally told.